Hello, how are you guys doing? This channel will delve into companies and their potential so we can invest with knowledge and confidence. In this channel, I'll be sharing my research on stocks that we believe to have potential for long-term growth. We'll dive into companies themselves, analyzing their financials, exploring their future prospect, and discovering why we personally invest in each one of these companies. So, whether you are a seasoned investor or just starting out, join me on this journey to uncover the investment worth your time and money. Thank you for coming in and watching. And so today we'll be discussing Nvidia stock. Before we delve into earnings, we will be discussing some of the goals for this video. And let's get right into the recent earnings. So basically, to recap, Nvidia shares surged more than 17% after reporting their earnings. The chipmaker showed an impressive top-line growth and record demand for AI chips, basically solidifying their position as a key player in the AI market. Their free cash flow margin has seen an impressive boost thanks to its data center, and their free cash flow grew as fast as their earning. However, later we will be discussing some concerns about the company and if AI has peaked. So, and let's look at their recent earnings. We see that they have crushed their revenue estimates by a whopping $1.6 billion and delivering an adjusted EPS of $5.16, which is above the 52 cents predicted estimate. And let's look at their fiscal year summary. While Nvidia prior guidance offered a clear picture of its expected performance, the company still managed to surprise and surpass an analyst's expectation in the recent earnings report. And let's look at their revenue segments, and as you can see that their revenue segments have skyrocketed by 126% year over year. The gross margin have hit an impressive 72.7%. This is a phenomenal growth and a testament to their strong execution. And as for their overall operating income, which is a bit concerning, however, the exceptional growth in computing and networking suggests the potential for future profitability improvement as segment matures. This impressive 72.7% gross margin translated into a truly remarkable 54% operating margin and an equally impressive 48% net income margin. This exceptional efficiencies are driving strong profitability for the company. And let's dive into some of the risk factors and some of the things that we need to consider. So their first biggest risk, I believe, it's its valuation, because currently the market is very greedy and bullish on Nvidia stock. So when market is usually extremely greedy and bullish, the stock is likely overvalued. So this basically indicates that it has reached the point of maximum risk. This occurs when market is extremely euphoric and greedy. And let's look at their current valuation ratios. Another example would be this to look, and currently its forward PE, which price to earnings, is around 37, and its forward price to sales is around 20, which in my opinion is considerably expensive. And right now Nvidia's price to earnings is 66, which is higher than the industry average of 56, suggesting a potential overvaluation. However, further analysis of growth potential is needed before making any further judgment. And as for their price to sales is 31, and which is significantly higher than the industry average of 10.2. However, later in the video we'll be looking at the valuation more in depth. Another biggest risk for Nvidia is the current AI boom is likely to slow down, and Nvidia data center will slow down their AI spending over the next 5 years if that were to occur. So, for example, that right now, as we already know, AI is not a fad. It has a lot of potential and growth. However, if the demand for alternative AI slows down, or if Nvidia's data center slows down the AI spending over the next 5 years, then Nvidia will start to stagnate and unable to maintain its higher revenue growth rates. If there's still demand for AI and AR chips for the next 5 to 10 years, then the market cap can be justifiable. However, let's look at their competition. Another risk is their competitors, such as AMD and Intel, will be able to develop more competitive AI chips. For now, Nvidia has monopoly in the AI market, making it over 90% market shares. Rivals to consider are Amazon AWS, Microsoft Azure, Google Cloud. However, all of these customers are making their own chips, reducing the IT spending on Nvidia's AI chips. Nvidia's competitors such as AMD and Intel pose threat by potentially developing more competitive AI chips, challenging Nvidia's dominant market position. However, Nvidia takes up 90% of the AI chips market, which is very promising and reason behind the bullish sentiment on Nvidia. Finally, there's another risk that we need to consider is the U.S. government that's imposing more restriction on Nvidia ability to sell chips to China. But from the recent earnings, it shows that despite their restriction, Nvidia revenue still grew, even though it didn't in China, where revenue declined significantly following the U.S. government export control regulation. So now let's dive into their long-term growth prospects and forecasts. So Nvidia's long-term growth prospects and forecasts remain promising, as emphasized by their CEO, who remains optimistic about company's future. He points to sustained demand for Nvidia's artificial intelligence processors, industry-wide trends such as generative AI, and shift towards accelerated programming. Nvidia's GPUs plays a pivotal role in advancement and deployment of artificial intelligence models, driving innovation in machine learning and deep learning capabilities. Market analysts have responded by raising price targets and upgrading earnings per share estimates, anticipating strong earning potential and revenue. The consensus among analysts leans overwhelmingly bullish on. So basically, Nvidia has potential growth for investment. Before we discuss further, let's look at some of their competitive advantages on other companies. So some of the key factors that contributes to Nvidia's competitive advantage over their competitors are technological leadership. So for example, their strong research and development. Nvidia invests heavily into the R&D, consistently pushing the boundaries of chip technology. This allows them to stay ahead of curve and develop innovative products and address the evolving needs of market. Another thing to consider is their focus on GPUs. Unlike diversified chip makers, Nvidia focus primarily on their GPUs. This specialization allows them to dedicate more resources to their graphics processing units, designs, development, leading to superior performance and efficiency to their products. Another advantage that they have is Nvidia's CUDA architecture, which is a powerful parallel computing platform that allows programmers to leverage GPUs for a wide range of applications beyond just graphic. This broadens the potential use cases for their technology and increase in market appeal. Another thing Nvidia has advantage over is their strong brand recognition. So in gaming market, Nvidia holds a dominant position in the gaming graphic card market, with their GeForce brand widely recognized by gamers for its performance and reliability. This brand recognition translates into strong customer base and loyalty following, and has a strong potential in their data center market. Nvidia has capitalized on booming data center market with its powerful AI accelerators. expanding its influence beyond gaming sector. This diversified presence strengthened their overall market position. So as you can see here that for Nvidia as of now, has shown a growth in their data center, and many of their large data center customers such as Amazon, AWS, Microsoft Azure, Oracle Cloud, and Google Cloud are shifting their investment from general purpose computing to accelerated computing. Since NVIDIA AI GPUs are much more powerful and energy efficient than the traditional data center CPUs, which I believe they have a strong future for growth and will likely to continue to grow in that aspect because of their energy efficiency compared to their traditional data center GPUs. So now let's look into its stock evaluation. We will be calculating NVIDIA stock using the discounted cash flow model. I use the discount rate of 10% here to be a bit conservative, but you can use a higher discount rate. So we will be considering three cases here: worst case, normal case, and the best case. And as you can see, that we'll be using 25% for worst, 30% for normal, and 36% for the best case scenario. Under the worst case scenario, we will be assuming that the free cash flow will grow by 25%, making the stock price value to be $408, which makes it overvalued by 63%. Under the normal case scenario, we will assume that the free cash flow will grow by 30%. Under these circumstances, the stock price will be at $491, making it overvalued by 46%. The best case scenario, we will assume that the free cash flow will grow by 36%. This will make the fair price to be $610. Will we be investing in Nvidia? Yes, we will be investing in this stock only when it's undervalued or trading at fair value. Despite the valuation concerns, the company dominance in AI market presents a compelling investment opportunity for patient investors. Thank you for watching and have a good day.